Hey, welcome back everyone. It is time for another red hot covered call car session video. I'm on the road. I want to talk covered calls. I haven't done one of these in a while. Don't worry, I got my eyes on the road. I just want to talk to you about covered calls. And in fact, we're talking about the cash secure put this morning because I want to give you a little insight or let you see the world through my eyes. And we're going to talk about two trades that I'm really underwater. So I really want to give you some insight as to how an active trader, a successful trader, thinks about these things. Can't win them all, and I haven't won them all. So when I find myself in situations like this, I always have a plan. I execute the plan. I talk about that all the time. And with my recent cash secure puts on Zillow, for which when the stock was trading at about 195, I wanted to buy 100 shares. I've said that Zillow will double in 2021. Well, it did. When I did that video, and you can go back and look at the video where I talk about where I'm going to spend $100,000 in 2021, Zillow was one that I picked, and I said it would double. Now, I do own 100 shares of Zillow at 103. So for me, I want to own 300 shares. So when Zillow popped above 200 and it peeled back, I'm thinking to myself, wow, this thing could double from the double. I mean, it's literally the second week in February. This thing has had blowout earnings. The sector is on fire. I'm thinking this is a great opportunity to do a cash secure put because the stock is trading higher, 195 a share. I mean, I can get some hella premium. So that's what I decided to do. Instead of buying the shares and then writing a covered call, again, I worry about 30 days, okay? I know I think the stock will double in a year, but I think about these 30 days because I got to put money on the table. I have to pay the bills, right? That's what we do here. We sell premium. So when I did the cash secure put at 195, I got $13, and I'm feeling really good because at the end of the day, man, 13 bucks, that's some great downside protection if this trade goes south. Well, I didn't think it would go south, so I'm thinking, okay, this is great. It has fallen. So over the next 30 days, hopefully it'll just dance a little bit, and I'll be able to be assigned the shares. As the stock will finish below 195, I'll keep the $13 premium. We'll add that to our cost basis, and we will move on. Well, the stock fell again. No news. The only news out there is that Redfin, its competitor, bought another business, and it's investing in another business to boost its business, which I understand. Zillow did the same thing. So I think this is profit taking. I mean, the stock has literally run up $100 per share since January. So I'm going to go ahead when the stock's trading at 165, I do another cash secure put. I mean, if I wanted to own the shares at 195, 165 is even better, right? Well, I end up doing that cash secure put. I end up getting, I think, $10, $11. I'm not sure. I'm on the road, right? You got to give me a little runway here. By the way, if you like this video, we do this every week. Subscribe to the channel. Trying to up your game. I'm an active, successful trader for the past 4.5 years. You can go to my website, cptdashboard.com. Last year was a record-breaking year, knocking down $110,000. Now, I had a goal of, 55? Crazy. I've made over $301,000 selling premium since I started this YouTube channel. I've documented it there the whole way. I show you my P&L. Absolutely love upping your game. Now, with that said, it's about upping your game. So in this situation, what am I going to do? Right? I can imagine a lot of you out there, maybe you're following my trades and you heard me talk about Zillow or another stock. Well, how do we mitigate the losses? Because with Zillow now down to about 161 this morning, I think it's February 22nd, I mean, I'm getting kicked in the ribs. Do I want to own Zillow at 195? No. So at this point, things have changed. My opinion of Zillow has not changed. I mean, this is just fluff, right? Wall Street runs them up to sell them off, to run them up again, make that fast, sexy, big money. And they're doing it now. So they're taking their profit. So here's a couple things I can do. Let's talk about this. And you can do this too, whether it's with Zillow or any other stock you do a cash secure put on. You can do this. So we have options. No pun. We have options. I can literally wait. I have 30 days. I mean, this thing has fallen from 195 down to 161 in 2 days. So the selling is vicious. That's all right. I get it. Been in this game many times. As you know, I've gotten involved with Alibaba near 200 and rode it all the way down to 148 and then rallied it back up for a total of a 5% gain. Did a video on that where it was the most unsatisfactory 5% gain I've ever had. Now, with that said, I can literally wait, right? I got 30 days. Selling premium gives us built-in patience. I've said this all along. This is what I've learned. When I was swing trading, day trading, I would always try to flip it quick, and I didn't have patience. And that's probably why I'm not a good swing trader, day trader. You know, I put on that trade looking to make 3%. I do all my charting and, listen to all the gurus with their 3 trading patterns. And I'd find myself in a trade, man. And next thing you know, it is headed lower. And to be honest with you, I didn't know how to deal with that and wasn't successful. Now, with selling premium, in theory, we have 30 days we have to wait, right? When I offer up my money to buy somebody's shares, somebody's Zillow shares at 195, I'm actually ponying up 195 per share, sitting that to the sideline, and that's times 100, right? And I'm now going to wait for 30 days. They have an opportunity to assign me their shares. And you know how this plays out. The stock finishes below 195, they assign me their shares at 195. They get that insurance they were looking for. Now, of course, if it finishes above 195, I don't get their shares. I keep the premium. I get my cash back. We do it again. So with that built-in patience, I'm able to watch the stock ebb and flow. And I do this all the time, man. Built-in patience. I love it. Now, in the case of Zillow, this thing has fallen some 30 points. So I may not want to wait, man. This thing could fall even further. I don't think it will, but it could. So I have to have a plan, execute the plan. So my second option here is to roll out of the current cash secure put that I sold, find a strike price, probably at the money, because that's where I'm going to get the most premium for my money invested. And then we just do it again for another 30 days. I'm hoping that when I give back my original premium for the 195 strike, remember I got like 13 bucks for it, I'm giving that back as a part of the buyback because I think that option is now trading for some 28 bucks, right? I got $13, it's now trading for 25 bucks. If I want to alleviate the obligation, I got to buy that back. So I'm going to give back the $13. I'm going to pay the rest in a pure loss, right? It's pure loss. I don't own the shares. And then what I'm going to do is I'm going to back down to the current strike price, or pardon me, the current stock price, and probably sell an at the money cash secure put. So let's just hypothetically say it's trading at 160, which very well could be. And say I can get an at the money 160 for let's say another 13 bucks. So you can see that this trade, I gave up 13 bucks, paid about 13 bucks in the loss. My new cash secure put will be plus 13. When you add and subtract it all, I probably lose a little here, probably gain a little bit of here. I'm on the road, okay? I don't have a calculator. I don't know what the options are trading at, but you see how I can roll out and down to mitigate losses. Sometimes you can roll out and down and you can make a profit. I've done this with UPro and DraftKings many times. But because this thing has fallen so far, right? That option for which I got paid 13 bucks is now trading for $25, $28. I can't sell the next 30-day cash secure put at the money and make that money back. I'd have to push this trade out to give the buyer of this option more time. And of course, that would give me more premium. But this trade then goes from a 30-day trade to a 60-day trade. And do I want my money tied up for 60 days? I'm not sure. That is an option, though. You can do that. But with that said, I told you at the beginning of this video, I have 100 shares, bought it at 103. Now, usually, I would never use shares that I bought, have a profit against my covered call and cash secure put losses. I will this time, because I have been on record that those 100 shares that I bought at 103 were going to be a part of my selling premium portfolio. They have been sitting in my portfolio for the whole time. When Zillow was trading at 105, 103, it's been sitting there. I've been wanting to sell premium. So it's been dead money, selling premium dead money on the bench for 2 months. Well, now I at least have that profit. Again, if Zillow's trading at 160, I'm in those 100 shares at 105. I have $55 of profit. So I can sell those shares, collect a $5,500 profit, buy back all of my two cash secure puts at a loss, probably at $5,500 in loss, and wash this trade. We then have no obligation. We have no shares, and it's a wash. We can reboot. Remember, these are unedited covered call car session videos. Please give me a little bit of runway. So there are 3 things that I can do. You know, I've done the roll out and roll down for an additional cash secure put credit, even though I've been losing money on my very first one. So what I want you to do is this. I'm going to leave it there. I'm going to give you an update on this because I'll probably be doing something today. I want you to think about this. Think about you. You're in a trade. You do that cash secure put, the wheel, right? A lot of you folks are really interested in the wheel, and you may have done this trade where you picked a company like Zillow. I'm going to move over here. You've picked a company like Zillow, and you did your charting. But see, now when you place the wheel trade and you're going to be assigned the shares, you're going to be assigned the shares much higher than where the shares are trading now. Because remember, part 2 of the wheel is to write a covered call, and we have our shares taken away. Well, think about it. You are assigned the shares of Zillow at 195. Yes, your cost basis is $13 lower, but the stock is trading for 160. So the next covered call, the next trade you make, the covered call, chances are you're not going to make much money on the option, or you're going to pick a strike price that's under your cost basis. You're in trouble. So for you new covered call players, cash secure put players for the wheel, this is an opportunity to learn, understand that you do have options. You do have the ability to roll out, meaning you buy back the option. I could buy back the 195 option for $20, $25, and $28, giving up my original $13 premium. So I don't lose $28 per share. I lose $28 per share minus 13. I can then roll down, pick an at the money cash secure put. I make credit, and hopefully the two together will mitigate my loss. But again, there's no profit there. But hey, we are in a trading business. We treat trading like a business. And that would be a good business idea. We don't want to lose money, and we don't want to sit on our hands. Got to make a good decision. Of course, I could wait. You can wait for 30 days. Now, some of you, you're doing the wheel, and you've been told to do the weekly cash secure put so you can obtain the shares quickly, so you can turn that wheel of profit with the covered call. So you're in trouble. You're in trouble, because had you done the 195 strike on Zillow, Yeah, man, this thing is trading at 160. There is no chance in hell this thing is finishing anywhere near 195 in your next 3 days. So you might want to roll out, take the loss, then roll down to an at-the-money strike and reboot the strategy and hopefully come clean. With that said, I'm going to leave it there. Hey, look, I want you to subscribe to this channel. We come back every single week talking timely and relevant covered call, cash, secure put trades. And hey, look, if you like this video today, bang that like button. It lets me know I need to come back and do an update to this video because you cats want to know how I'm handling good and bad trades. Hey, look, I have a 1 free month offer for my membership, and my members got an email today, and I sent some other things as well. I always send out what is John watching emails, and I'm going to send one out today on a stock we're watching. The small ball players with about $5,000 can trade. And hey, look, I'm doing it with the 3 folks that I'm coaching. I'm actually going to buy the shares with them. They're going to place the trades. And for the next 30 days, we're going to manage the trade, just like we're managing their Rocket Mortgage trade that we did 2 weeks ago. Okay? I need you in the game. That's the key here. I want you to get your financial education, open up that small ball account, learn it, feel comfortable with it. Because if you feel comfortable with anything, you'll do it. Yeah, I'm speaking to you. Let's stop watching everybody else have success in this, bull market that is going to continue going higher. I'll tell you what, when you get that first trade, that second trade, that third trade, you won't need me anymore. You won't need anybody on YouTube. But hey, look, you'll love my ideas with my very inexpensive upgraded CTP dashboard premium membership. I would love to welcome you aboard. Hey, look, be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.